Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY22 earnings conference call of Goodluck India Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mahesh Chandra Garg, Chairman of the Goodluck India Limited. Thank you, and over to you, sir.
This is MC Garg. Good morning, everyone. Welcome to Goodluck India Limited Earnings Conference call for third quarter and the 9 months ending 31st December. I would like to begin by expressing my gratitude to you all for taking the time to join us on this call with me today. Our Mr. Ram Agarwal, Chief Executive Officer, and Mr. Sanjay Bansal, CFO, and Bridge IR, our investor relation partners. The company is an established manufacturer of engineering precision products incorporated in the year 1986. It is headquartered in Ghaziabad, 326,000 metric ton per annum capacity. This capacity is spread across 6 facilities, 5 near Delhi in Uttar Pradesh and 1 in Kutch, Gujarat, employing almost 3,000 workers personnel with over 3 generations of hands-on experience of promoters. Goodluck started as a manufacturer of ERW tubes. Owing to our engineering background, we always wanted to be in the value-added segments. So over a period of time, we got to forging activity, after we decided to add another vertical, precision tube manufacturing, which comprised of both ERW and CDW technologies. We therefore added the precision engineering fabrication as another segment. Solar is another area where we see huge potential for supply of value-added fabrication and services. Another segment that we have been focusing is on defense and aerospace. We have crossed few major milestones, are a valued supplier to many of the prestigious defense projects. Our CEO, Mr. Ram Agarwal, will talk about the segment in detail. Last 4 to 5 years have been particularly significant for the company. We have undertaken important capex, penetrated strategic market, expanded product portfolio, and diversified our value-added offerings. We have set few goals for ourselves that include increasing the share of value-added products, target an EBITDA per ton of roughly 8,000 per ton, reduction of debt, expand our geographical reach. The global markets offer a great deal of opportunity for us in the various segments. We have been evolving strategies to take care of such opportunities. As for the solar segment, US is a big market now with us. Its focus on renewable energy, with our presence there, we are confident of penetrating in the US market. We are seeing similar demands echoing from other geographies of the world. The high-speed railway corridor project of Government of India and requirement new age fabrication offer huge opportunities with our expertise. We are sure of getting a significant market share here. We are on course of making the Goodluck a world-class manufacturing organization with greater focus on value addition. We would like to see ourselves evolving as a partner of choice for high-end engineering and fabrication player in the infrastructure and manufacture of the best class precision tube, a formidable player in the area of defense and aerospace. We are on course of our goal towards evolving into a solution provider from just being a manufacturing company. I would now like to hand over the floor to Mr. Ram Agrawal, who will be talking about the business in detail. Thank you.
And welcome all of you on this call. After the opening remark by Mr. Garg, I would like to take you through company in a bit more details. Company, as you know, company caters to diverse product range with high level of customization. The products are divided into 4 major categories: engineering structures and precision fabrication. The other is forgings, precision pipes and auto tubes, and the 4th division is CR coil pipe and hollow sections. Company strategically has been focusing more on high margin value added products and high growth sectors like auto, solar, railways and defense. This is most likely to start reflecting from current fiscal in terms of margins. I would like to dwell on each of the segments in detail, starting with engineering structures and precision fabrication. This is one of the key segments, not only in terms of our engineering expertise and passion, but also in terms of growth opportunities. In this, we are evolving to provide both fabrication and services for infra solutions, be it roads, bridges, or smart city structure, or supercritical bridges or high-speed railway corridors. Primary and secondary structure for boilers, turbine generators, launching girders for steel and concrete girders, building structures, and technology structures. Company has a total installed capacity of 60,000 metric ton per annum for this segment. Recently, as you know, the company was awarded prestigious LOI of rupees 198 crores by L&T for the bullet train corridor under high-speed railway corridor for supply and fabrication of bridges on Mumbai-Ahmedabad bullet train route. Under this, Goodluck shall work alongside Japanese engineers for first of its kind bridges to be constructed in India. There is a huge scope of growth and expansion in this segment, and we envision an order book of over 1,000 crores in next 2 to 3 years. Another area of our focus is solar power. We provide structures for the solar panels. We have developed structures which require engineering expertise and have high demand across the world. We already have a lot of inquiries. We are soon going to start exporting. The government's initiative of 100 gigawatt solar energy is likely to boost company's solar support structure capacity. Here again, we can foresee huge opportunity, as Reliance has just given a statement in Gujarat that they will like to put 100 gigawatt solar energy parks. Now we come to the next segment, which is the forging. We specialize in stainless steel, duplex, carbon, alloy steel forgings and flanges, which is supplied in more than 100 great products. Company caters to various and wide industries like automotive and truck, SCV, agriculture, machinery, equipment, valves, fittings, petrochemical applications, hardware, off-way and railroad equipment, general industrial equipments, aerospace and defense. Forging for defense and aerospace has successfully made marks across the industry. The process of adding new machinery to increase capacity of forging single piece to 14,000 kg from 7,000 kg and total capacity per annum to 30,000 metric ton, enabling manufacturing of highly valued products, is almost complete. The production would commence in February. With this, we will be in a position to manufacture and supply high valued products, which would result in greater profitability. We are suppliers to some of the biggest names across Indian aerospace and defense: DRDO, L&T Defense, Godrej Aerospace, BrahMos Missile, Tracker, Howitzer deal. As of now, defense contributes approximately 2% of the forging revenue. But this is only the beginning. As negotiations and ramp up of order book within these time have a long gestation period, we are also in discussion with various organizations for increasing our association with several other projects. We are pretty sure that we are at the inflection point. The third segment is precision pipes and auto tubes. Here we offer products that require high engineering expertise. We are among the very few players to manufacture high quality CDW tubes, cold drawn welded tubes. Our products are one of the leading products in terms of quality and consistency, resulting in high customer satisfaction and repeat orders. This segment is a substantial contributor of export volume to the company. We are supplier to some of the most respected brands across the world, both on road and off-road auto sector. The other sector is CR coils, pipes and tubes. This is the oldest segment of Goodluck. Our coils and pipes are demanded all over the country, chiefly in automobile components, consumer durable items. ERW pipes and tubes find application in precision tubes, support structures. These are used in chassis of vehicles, earth moving equipments, galvanized sheets, construction of railway coaches, drums and barrels, material handling equipments, tin plate, agriculture equipments, and many other items. Apart from these products, our excellent range of products and services have enabled us to leap geographical bounds and register strong presence in 100 countries across the globe with a base of over 600 customers. We have extended our reach to the customers worldwide with a well-knit network. 57 and 43 is the split of our products between domestic and global markets as of 9 months of FY22. That's all from my side. I shall now hand over this call to Mr. Sanjay Bansal, who will talk about the financials in detail. Thank you.
Thank you, Mr. Agrawal. I, Sanjay Bansal, welcome you all to this call. Now coming to our consolidated financial performance. Financial highlights for third quarter ending 31st December 2021. The volume stood at 72,273 tons as against 61,827 tons in Q3 of financial year 21. The growth was 16.90%, being our highest ever quarterly volume so far. Revenue from operations stood at 705.80 crores in Q3 of current fiscal as against 420.17 crores in Q3 of previous year. Growth was 67.98%, mainly on account of higher exports. Export sales for Q3 of current fiscal stood at 32.42% of total revenue. EBITDA for the quarter was at 47.39 crores as against rupees 32.47 crores in Q3 of previous year. Increase was 45.95%. EBITDA per ton for the quarter stood at 6,557 rupees as against 5,251 rupees in Q3 of financial 21. Q3 of current financial year stood at profit during current Q3 stood at 20.16 crores as against profit of 11.06 crores in Q3 of previous year. Increase was 82.29%. Financial highlights for 9 months ending 31st December 2021. The volume stood at 1,92,752 tons as against 1,65,760 tons in 9 months of previous year. Growth was 16.28%. Revenue from operations stood at rupees 1912.42 crores in 9 months of current financial year as against rupees 1091.29 crores in 9 months of previous year. Growth was 72.24%, mainly on account of higher exports. EBITDA stood at 130.66 crores as against 88.73 crores in 9 months of previous year. Increase was 47.25 crores. EBITDA per ton for 9 months stood at 6,779 rupees as against 5,353 rupees in 9 months of previous year. 9 months profit during current 9 months stood at 50.72 crores as against profit of rupees 21.87 crores in previous year 9 months. Company is also focused on minimizing finance cost, which is reflected in the quarter as well as 9 months. Finance cost for Q3 current financial year was at 2% as against 2.77% in Q3 of previous fiscal year and 2.28% during current 9 months as against 3.71% in 9 months of previous year. That's all from my side. We can now open for floor for question answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question is from the line of Parthiv Jonsah from NVS Brokerage. Please go ahead.
Yeah, congratulations on a great set of numbers, sir. Hello?
Yeah. Good morning.
Yeah. Can you hear me, sir? Congratulations on a great set of numbers, sir.
Thank you, sir.
Yeah. Sir, I've just got a couple of questions and they're all quite broad-based questions actually. So the first question is, now we are almost at the end of January and only 2 months to go. What kind of, top line and margins would you be achieving during the current financial year and a year going forward? That is in FY23.
Likely to be in line with the last 3 quarter performance.
Sorry?
Likely to be in line with the last 3 quarter performance.
Okay, so the third quarter performance, right?
Yeah.
Okay, sir. And sir, your debt is almost, your long term is around 105 and your working capital is about 376. That is almost about 480 kind of crores, and you are paying almost say 60 odd crores in finance cost. Any plans to reduce your debt during the current year?
You see, we have reduced our finance cost drastically by better utilization of working capital.
Okay.
Our focus is to further reduce the debt. So our next 12 months repayment would be about 48 crores. So definitely in next financial year, about 50 crores would be long-term debt would be reduced. And
okay, so in 23 basically.
Yeah.
Okay. Sir, with this, you have actually got letter of intent for this 200 crores, right? For the bullet train, and you said you are expecting another 1,000 crores from the project in coming couple of years. Am I right?
Yeah.
So, but sir, my question is, the bullet train project is quite a bit in distant future. So, how confident are you, because this is practically a very high value added product what you will be supplying. So, how confident are you in achieving that kind of numbers? Because 1,000 crore would practically mean almost say 1.5 quarters of a revenue for you.
Basically, what we have projected in this Concall, that is not 1,000 crores of high-speed rail. That is
okay.
all of fabrication projects. What we will be doing, it will be high-speed rail, it will be rapid rail. What we are doing with Meerut Ghaziabad, it is IRTS. So all right. Railway projects are coming. So that will be outlook for next 2 to 3 years.
Okay. Got your point. So perfect. And so this precision torque tubes, the order book of 300 megawatt, what you have, what is the value of that?
Pardon?
This precision tubes order book of 300 megawatt you have, what is the order book for that? What is the value of the order book for that?
The order book, basically, this is a 300 megawatt. In this, the structure part is almost 10 to 12% only.
Okay, and what would be the value for that?
So, for that, you can say it will be almost 20 lakh rupees per megawatt.
30 lakh rupees per megawatt by, say, 30 megawatt, right?
Yeah.
So almost say 9 to 10 crore rupees.
Yeah.
Okay. And so, this quarter you have actually, drastically improved the margins and everything. Would this continue going forward in future?
Yes.
Okay, okay. For now, sir, my questions are over. Thank you for your time. In case if anything, I'll just rejoin in the queue, sir. Thank you so much.
Welcome. Welcome.
And best of luck, sir.
Thank you. The next question is from the line of Kalpesh Koti from Valentis Advisors. Please go ahead.
Yeah, good morning, sir.
Good morning.
Yeah, sir, can you share the status of the L&T LOI?
Basically, this LOI is for the manufacturing of the combined business for the Mumbai-Ahmedabad high-speed railway corridor. So L&T has taken this LOI from National High Speed Railway, and in turn they have given this order to us for manufacturing this. However, erection and other works L&T will be doing. So a test sample is under fabrication at the plant, and once it gets cleared from their Japanese counterparts, then the actual production will start.
So when it starts generating, contributing in the revenue?
I hope in the first quarter of the next financial, it should start.
Okay. Can you share which are the top contributing clients domestically and globally, and who are our top 2-3 competitors in the industry?
It is very difficult to name the customer as on date. However, there are different competitors in different segments. Like in auto tube, our very old established pioneer, TI, in structure, in forging, they are brand names who are established for long, are our competitor and our peers, to say, not the competitor. Because there is enough room for everybody and everybody can supply. So we don't take them as a competitor, but they are the peers in the industry with whom we are competing.
Okay. So in last quarter we faced some raw material availability issue. Do that ease out in Q3?
It eased out a bit in Q3. However, supply still remains a concern, HR coil.
Okay.
Due to various factors prevailing in the market, not many suppliers are available in India. However, of late, government has removed all import restrictions, removed all anti-dumping on HR coil import. So supply should ease quite a bit. However, demand for this product remains strong as on date.
Okay.
And we have been able to get better supplies of raw material in the third quarter compared to the second quarter.
So how do we have a plan to achieve our targets?
We don't. Please carry on.
So so there is some supply side problem, raw material side issue, which is not eased out yet, and we see in the sharp jump in freight cost also.
I should explain, there are no issues.
Okay.
There is no easy supply route. We have a customized customer base and product base. So this issue will always remain. It is not a vanilla product. We don't make out of vanilla product. We have to have the material and get it produced by HR manufacturer as per customer requirement. This will always remain an issue. And fortunately for us, our relationship with our supplier is far excellent, and we are getting full cooperation. In spite of shortages, we got our supplies whatever we needed.
Right. So what's our debt repayment for the 9 months?
Our debt repayment during first 9 months was 34 crores.
34 crore. So still we are, we are targeting the debt-free company, right? Long-term debt-free.
Yeah. In next 3 years, we are targeting debt-free company. Long-term
That
debt.
can be achieved in next 2 years?
Next 3 years.
3 years. Okay. And sir, what are our ROC target for current year?
ROC target is 15% in next 2 years.
Okay. Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Aniket Redkar, an individual investor. Please go ahead.
Good afternoon, sir, and congratulations on the good set of numbers.
Thank you.
Yeah, sir, I have a couple of questions. Sir, as we can see, the solar sector seems to be very focus area right now. So, what are our plans and target for the order book and the margin?
So basically, you are talking of the solar sector. So
Yeah.
Right now, you are seeing everywhere, everybody is talking of the solar renewable energy, and solar is the greater part of it.
Yes.
Like Government of India is targeting 100 gigawatt. Reliance, a private company, they are also targeting 100 gigawatt. And since the time that international players in India Solar, they all have given a commitment that by 2030 they have to put down the carbon imprints. So what I look forward, there is everywhere demand for the solar products. What we are making, that is the solar support structures. And we see as the demand increases, margins will increase because capacity is still limited.
Okay. So, sir, my second question, basically, which geographies we are targeting, I mean, for our segment particularly?
Yeah. So basically, you see now everywhere, even you take an example of US. US is also targeting because their fossil fuel consumption is more. So they have to put more pressure, more on the solar and renewable. It is solar, wind, combined, hybrid. So these geographies are around US and its countries. US and its allied countries. There is a good geographical area where demand is likely to come.
So can we say US is the high growth potential geography right now as we are targeting most?
It seems. Right now it seems.
Okay. So, sir, as companies focusing more on the value-added segment, so how we see the contribution of various value-added segment moving in future, and what are our plans for this value-added segment?
Basically, what we are doing right now, our infrastructure, our auto tubes, and our forgings. These are the value-added part which we considered where the EBITDA margins are more than 10%. We consider it a value-added, and we are going towards it. We are every year, every quarter, we try. Our aim is 75-25, but till now we have not achieved it. But in next 2-3 years, we want to achieve it.
Okay. So, sir, one more question. As we can see, the raw material availability was an issue in the last quarter. So, how do we see it going forward? And what are our plans for this raw material issue in continuously increasing the raw material prices?
Raw material prices are a bit stabilized of late. For last 1 month, we see stability in steel prices. Rather, there is a little correction has come in the prices. I don't see any crash coming into the prices, but price is stabilizing slightly at a lower level. Availability is likely to improve.
And sir, one more last question. What is your cash flow and the free cash flow status right now?
Considering the good profitability, cash flow status is very good as on date.
Okay. 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 Okay, sir. Thank you so much, sir. This is from my side.
Thank you. The next question is from the line of Chintan Desai from Param Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. I have two broad questions. One is pertaining to what is the ROCE and working capital cycle, if we want to split across these four segments that we operate in. And when we speak of regular products versus the engineered value products, what could be the EBITDA per ton between these two segments?
Can you repeat the question, sir, again, please?
Yeah. So my first question is, across the four segments that we operate in, what would be their ROCEs and working capital cycle in days? And secondly, when we say that around 38% of our products business mix is towards regular products and rest of engineered value, what would be the EBITDA per ton between these two segments?
EBITDA per ton, I'll come to the second question. EBITDA per ton in 30% is around 3%. And in other products is around 10 to 11%.
Okay.
And other question was ROC. ROC as a company I can tell you, but segment-wise I have not worked out.
Okay. Got it. And working capital cycle across at least these four segments, how do they work?
Average is 30 days.
30 days. Okay. So all the four segments have a similar working cycle, can we say that?
Working capital cycle for domestic and export are different. Working capital cycle for export is about 20 days, while for the domestic it is 35 days.
Okay, that's it from my side. I'll come back in the question queue. Thank you.
Okay.
Thank you. The next question is from the line of Krishna Mundra from an individual investor. Please go ahead.
Hello. Good afternoon, sir. Sir, my question is, what are your future capex plan? And you are saying that your solar sector area, the capacity is limited. So, what are is there any specific capex in that area and the current capacity utilization?
Our current capacity utilization around 78%.
In all overall, the company's overall.
Overall, but we don't have any capex plan as of date. However, it will be taken up after the end of the year. We will see what capex plan we have. Immediately, we don't have any plan for the capex.
Okay, sir. Thank you. Thank you, sir. That's it from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Rohan Mehta, an individual investor. Please go ahead.
Good morning, sir, and congratulations on a great quarter. Sir, just to add on a couple of questions that you addressed earlier, the working capital cycle that is there right now, do we have any target in mind, or can we expect the working capital cycle to be around the same level as it is right now?
We have a target to improve our working capital cycle depending on the market situation. You know, when the slowdown comes, when the demand remains muted, working capital cycle increases. As in second quarter, our working capital cycle came down to 22 days. But in the end of the third quarter, there was a slowdown in the market, so working capital cycle increased. However, we will be satisfied if it comes to around 20 to 25 days. That's our target.
Okay, noted, sir. And sir, we've seen good exports performance. So is it also likely to continue? I mean, what would be your ideal share of exports in the total revenue?
Total revenue is around 35% is our export we are achieving. And we expect it to continue at least in the immediate future. I don't see any threat to this.
Okay. Because if exports increase, then I believe working capital will also overall improve because, like you mentioned earlier, exports have a shorter working capital cycle.
Right, you are right.
Okay, sir. And sir, any targets, do you have even, say, rough targets for the defense side of the business, or any new products that might be in the pipeline for that?
We don't have any target for the defense. You know, it is a difficult area. There are a lot of entry barriers, lot of approvals are required. We are just starting, and we aim to go big on this. Once our new project gets commissioned, we will be going big in the project and we'll try to get more business. Of course, we don't have any target immediately that how much we can achieve in how much time. It depends. After the plant is commissioned, how it plays out, we will see.
Got it. And sir, about the for the forging segment, what would be the status of the capex that is going on there, sir?
It will be on trial within the first week of February, and the revenue will start flowing from March or full fledged in the first quarter of the next year.
Okay, sir. So, in terms of, so what can be expected? Like you said, maybe the synergies will start coming in from Q1 of next fiscal year.
Yeah.
Okay, sir. So, just one more question. For each of the individual segments, do we have a separate target or sort of like a roadmap for the individual 4 divisions?
Yes, we do have, but it is an internal system where we make the targets for the next year. So in March, after reviewing all the sectors, we will definitely set the target for the new year, and we will let you know in the next phone call.
Okay. So any guidance on the next initial quarters of the next year?
So
top line and profit margin, sir.
Sir, this fourth quarter guidance we can give you. This is to be in line with the last 3 quarters.
Right.
And it is all depend. The budget comes in the 1st of February. The policy decisions in the budget is going to favorably or adversely affect the business environment. We are expecting it will be better for us with the elections around the corner, budget coming in, government proactive business policies. I see lot of headwind, lot of business prospects in time to come.
Okay. Understood, sir. So, sir, just one long-term vision question we had. Around a target of 5,000 crores top line would be achievable by what? By which fiscal year, sir?
Say next 5 years.
Next 5 years. And profit margins at that stage would be similar to today's levels, or around what level would the profit margin be at?
I should not be think of it is better than today's margin. Can I ask you this question?
Right.
we hope for the better one.
Right. Okay, sir. Okay. Just, sir, do you see any competition in the domestic or export market that is of significance?
No, we don't have monopoly anywhere. Competitor will always remain, and we will face the competition. We are confident.
So, which would be your top competitors, sir, in the key markets, India and the USA, for example?
So, truly speaking, in all the segments, we are in many segments, but fortunately or unfortunately, we are having very reasonable or very small market share. So, it seems no threat to us. We have just to improve. Market is too big for us.
Right, sir. So, in a way, it's a good thing that there is a lot of scope for growth also.
Definitely. I look forward.
Got it, sir. Got it. Thank you so much. Thank you for taking my question, sir, and all the best.
Thank you.
Thank you. Reminder to the participants, to ask a question, please press star and 1. Anyone who wishes to ask a question may press star and 1 now. As there are no further questions, I would now like to hand the conference over to Mr. Mahesh Chandra Garg for closing comments.
I would like to take this opportunity to thank each member of Goodluck family. I would also like to thank our clients, creditor, bank, financial institution, and other stakeholders. For any further queries or information, please get in touch with our investor relation team. Thank you.
Thank you. On behalf of Goodluck India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.